The March numbers has been very disappointing. I was expecting a very low growth, a few basis points possibly, given the fact that last March, that is March 2011, the IIP really grew substantially. It was 9% plus. So given the base effect, and given what we've been seeing recently, looking at the core numbers, I wasn't expecting any improvement, maybe a moderate improvement. But yeah, the negative numbers have been very disappointing. Yes, it does indeed. In fact, the first 3 quarters of this calendar year, we really expect the growth to be very low. Very low in the sense it will definitely be sub 7%, maybe even lower than 6.5%. Hope and we do expect some pickup from the fourth quarter of this calendar year onwards. But yes, it is just an indication of what's going to happen for the next 3 quarters, that's for sure. Nothing else but improve the investment climate. I mean, that is the one single thing that the government can do. The question is, can they? Because investment climate has been very, very badly hit. Budget didn't give any confidence. As I said earlier, a lot of negative vibes coming out from the government. PMI numbers and the IIP numbers do not seem to go hand in hand. There is some dichotomy that I find out. So the PMI for April does indicate some improvement, not much, some improvement. But whether that's going to come, only time will tell. I doubt, given the fact that exports are definitely not doing well. In fact, even in March PMI, I saw that PMI expected the export orders to go up. And if you look at it, the way the exports performed, it really was not in tune with what PMI was talking about. So yes, if you look at the PMI numbers, one can still hope things might be better in April. But if you look at how the dichotomy between the PMI and the IIP numbers over this last few months, one is not very confident that it will be adequately reflected in the April numbers. We have seen plethora of bad news coming out one after the other. Look at how GAR has been handled, look at how the retrospective tax issues have been handled, so on and so forth. So, at the time when we desperately need foreign investors to come into India, we are giving all the wrong signals. They are clearly very jittery. So, all of this taken together, given the fact that, capital goods sector has been contracting, so investment is clearly not happening in this country. And if until that happens, there is a limit to which domestic demand can pull the growth. And if domestic demand actually starts pulling up the growth, it will be at the cost of inflation. So we will see soon. I can see growth coming off. So the biggest concern at this point in time is investment not happening.